Hi, it's Lee, and welcome to the Tesla Economist. Can you remember why you invested in Tesla? What it was that gave you that conviction that they're going to be the next big thing? Remember the excitement it gave you to think what it would be like when Tesla becomes the company that sells the most vehicles in the world. It sure was a lot more fun back then when the stock price kept jumping to new highs, and we were told about all these new, revolutionary new products, components, and manufacturing techniques, massive new futuristic factories, and a CEO who was so dedicated he would literally sleep on the factory floor. But now we fast forward a couple of years since then, and we're still waiting for this revolutionary new vehicle that now has over 1.5 million people pre-ordered in anticipation of living in the future. We're still waiting for Tesla to ramp up their in-house batteries, and along with proof that the dry battery electrode is even possible in mass production for the cathode. And Giga Berlin would appear that it's not even halfway to volume production as of early last October, and volume production was the initial target for the end of this month, although we are hearing rumours that Berlin is getting closer now. Then Texas even further behind again. And in some ways, the progress of these two factories is moot anyway, as they're still using a stockpile of 2170 cells, which is finite and likely to be depleted sometime in Q1 2023. Which would then mean the progress of these factories relies on the fate of the 4680 ramp. Our excitement might have still remained though, had it not been for the economic disaster we're facing on top of these internal issues. In my opinion, I think I can succinctly summarise how I see the economy now, and that's all anyone has is an opinion, even if they're Jerome Powell or Warren Buffett, and my opinion is based on what the math is telling me. Now, you can say what you like about the transitory elements of inflation, and they are somewhat true. Supply chains have been off their rails and trying to catch up again. Tesla resolving a lot of theirs by ending just-in-time delivery and stockpiling components. Because Tesla isn't letting anyone stop their plan. No excuses, ever. In case you didn't believe that, then check what Tesla recently done. There appears to be tons of sleeping quarters for workers now in case of COVID lockdowns in Shanghai. Does it sound like Tesla want any excuse to stop or slow down production? Likewise, Tesla have recently made similar preparations for energy shortages in Berlin, along with their suppliers. Tesla appear to be doing everything they can to not slow down production. Who knows? Maybe they still aren't close to meeting demand yet. Anyway, there was transitory inflation from the likes of wars too. But in my opinion, the lion's share of the inflation we're experiencing is from the massive amount of currency that was printed over the last few years. Something like 40% of US dollars in circulation printed within that time. I don't think you'll find many economists that will dispute the fact that printing money by the reserve banks buying government bonds or IOUs will not affect inflation. And when you print this much, then there are serious consequences. Then we know the number one axiom to combat this inflation is raising interest rates, which is what we're seeing everywhere around the world. The US, however, have the global reserve currency, and as a result, there are many nations also holding trillions of US dollars that automatically have to pay for the US printing all their money. The cost is global, yet the benefit is only domestic to the US. One other advantage of a global reserve currency. Now, there could be something like 30 or so % inflation to come as a result of all this. The interest rates simply stop inflation spiralling out into hyperinflation, and the reserve banks losing their favourite tool, their license to print money, as it becomes worth less and less due to there being so many more dollars in circulation. But we're still seeing very high rates of inflation. All the rates are doing is potentially lowering people's purchases. The inflation may come through slower rather than faster, and hence avoid a hyperinflationary scenario. This is the cost of all that printing, and the inflation creates more inequality. When rates return to normal and the economy is no longer being compressed, and the money has found its new positions, then people with assets will find those assets are worth more, and people with debt will find their debt is worth less in normal terms. I.e., many homeowners will eventually be better off. It will be those without houses or investments that will suffer, as the world will be more expensive for them. Their wages will likely not have increased as much as their rent, due to house prices now having increased that much more. However, during the crash or recession, some homeowners' mortgages may be coming up for renewal, and they will have to renew their mortgages at these new high rates. These new rates may not be affordable anymore, and they have to sell their house, or it gets foreclosed on. Equally, the economy may be so bad that people are losing their jobs, and also can no longer afford their mortgages. along with the increasing costs in energy, gas, and food, making it even harder to pay for a mortgage, and also have to sell their houses. Anyone selling assets in these times are the losers. They're the ones who lost in this economy. They're the ones who will end up paying some of the cost of this recession. They are deflating the property market by selling their houses cheap in a market where there are few buyers, due to others not having enough money and mortgages costing so much more. Of course, there are the contrarian investors out there who have been simply waiting for these times to buy up cheap. These losers are paying the bill for the money printing, along with those who have to sell their other investments too, like in the stock market. The winners will be the ones who can get through all this without having to sell any assets or investments during this time. And we don't know if we have hit the bottom yet either. The good news is I don't think the banks are over-leveraged this time, and we don't have to worry about them potentially collapsing. Well, except perhaps in China due to that property bubble over there. Then, once enough people have lost a fortune and the economy has inflated enough and the rate of inflation has reduced dramatically, then the reserve banks will finally pivot and take the pressure off the rest of us. House prices won't likely recover to the highs they were for a few more years after, likely same with the markets. That would be a perfectly controlled recession. However, there may only be so much ammo the reserve banks have until too many things break. In nations where the citizens have a high private debt to GDP ratio, too many people might lose their houses, absolutely destroying the local property market and wiping too much value out of the economy. A lot of mortgage debt is used as equity to fund businesses too. This could create a real catastrophe, so governments may pivot before inflation has reduced enough. That would be assuming competent central banks. Then other nations have too much government debt, and when things like treasury bills come up for renewal, there is not enough government income to cover the new rates. Equally, they've stopped quantitative easing, further reducing their available funds to run a country. This would mean the central banks would need to pivot earlier as well, so the government can keep going. These scenarios would result in more inflation coming eventually, with the hope that the central banks have at least eased it enough that it won't spiral too much further out of control, or have perhaps put the economy in a real recession, where people have lost their jobs, and when rates are lower, fewer people have any money to spend or inflate the economy. Now, if Tesla had managed to hit volume production in both factories this year, and they were using 4680 cells that was also at high volume production, then obviously things would not be so bad even during this difficult, unpredictable economy. Tesla would be able to make Model Ys in the US with a range in excess of 300 miles for around $30,000. And even if they had to sell them at $45,000, there would still be more than 30% gross margin. Same for Germany and Europe. A car that shouldn't have too much trouble selling through a recession at that price. An additional 130,000 units a quarter, probably increasing earnings a further $2 billion a quarter. And that would be with these factories at about 1/3 of their production capacity for their Model Y lines. And still a whole other Cybertruck factory in addition to that. Sure, the PE ratio would have still been slaughtered by the economy, but at least the company would have been going well. It's the fact we have to face this stagnant progress during some really tough economic times, yet by some miracle, Tesla still managed to increase production this year by pretty much 50%. There are signs that these factories will ramp up enough next year though, with it not looking too extreme to consider potentially 50% increase in production next year too. In fact, it doesn't stop there either. We are hearing that Tesla are extremely confident about the Texas ramp and preparing for 75,000 Model Y vehicles to come out of Texas in Q1 2023. That would be in excess of volume production. If this occurs, it's progress like this that makes it much easier to hold your Tesla stock whilst the economy is not looking so good. The reserve banks are putting on the squeeze to protect their currency and printing presses, but they can only squeeze so hard and for so long. It's really hard to get an economy back on its feet if it hits a deflationary environment or stagflation. Bear in mind that the only way Tesla has been affected by this global recession is a minor price reduction for their vehicles in Shanghai, which actually happened at the same time Tesla increased their production by a lot. Especially if you think of the relative amount of domestic sales. Do you get it? Tesla reduced their cost in production for their vehicles in China with a production ramp. The additional vehicles were an even further improvement on operating profit and could thus reduce prices whilst increasing supply and demand. I made many videos last year about a potential recession coming, But like they say, it's like trying to catch falling knives. It was inevitable if you're a long-term investor. The real issue with Tesla is that their 4680s are taking much longer to ramp up, and thus volume production in their new factories. That entire sentiment can all change with one tweet from Elon that just says, hit a 40 gigawatt hour annual run rate on 4680 cells production in Texas. It's just been extra hard for us investors not seeing the progress we were promised. Whilst the economy getting hit on top of that, and then Elon appearing to be more focused on his new toy called Twitter, then it's tough with all the continual FUD to get you down too. But something tells me Tesla didn't entirely bet the future of this company on 4680 cells. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.